Hey guys, this is Ryan with TrendLizard.com. I hope you had a fantastic holiday week last week, Thanksgiving. Happy Thanksgiving. Now it's time to get back to work, and we want to pick up right where we left off, and we're going to look at another hot stock today. If you look at trending lists or look at the searches out there on the internet, there is no hotter stock that is searched more often than Apple itself. It's probably on your desktop, it's probably in your pocket, and it's probably in your portfolio, whether you own it outright or whether it's in your IRA or 401k through a mutual fund. So it's obviously a very big part of the U.S. economy. So what it does, a lot of people follow. So it's very important, obviously. Since October, early October, it's gone from about 230 down to 170. So it's lost about 26% of its value over just less than 2 months, really. So that's quite a dip. And it's something that should be on our radar to figure out, is this the end of its beautiful bull market, or is this just a counter trend pullback? And is it something you want to continue to hold, or is it something that maybe you want to purge from your portfolio and move on, or maybe you want to be looking at becoming a buyer after this dip? So that's the goal today. We're going to look at Apple from every which direction using the Elliott Wave theory to see where it stands and whether it is a buying opportunity. So that's the game plan. Get comfortable. Let's go ahead and take a look at its chart. Here we go. Okay, so here's our chart of Apple dating back to 1984. This is all data we have. This is its inception back in 1984. It shows you everything that's happened since Apple started trading way back when. So obviously, Apple did not start out as the dynamic stock it is today. It spent a lot of time going sideways, trading as more or less a penny stock. In 1998, things changed. It went from about 50 cents and kicked off from there up to about $5 to eventually $230 over the course of maybe 15 years or so off the 2003 low. So this is bullish stuff here, and we don't really need to reinvent the wheel or anything. All we want to do is look for three-wave patterns, which are counter trend moves, versus five-wave patterns, which are trendy moves, to determine if we're in a trend and if that trend is over. So as you can see here, this pullback back here, basically its biggest pullback back in the 90s, was clearly a three-wave move, and that proved to be a counter trend move. Price retraced it. That's what happens to counter trend moves. And now we know that we're in a massive five-wave trendy move. We can also see very clearly that the trendy five-wave move that began way back in 1998 is still not over. So there's no reason to think that Apple is at any impossible high that's going to continue for a substantial amount of time until there's a very large five-wave advance that's apparent on this chart, and that's not what we're seeing yet. So on a very long-term time frame, Apple remains bullish. It's very clearly in a trend. When it goes from 50 cents to 230, you can take a guess at that, but the Elliott Wave theory confirms it here. So then we want to dive in deeper and see exactly where it is in this five-wave advance. So you can see it's been in a large third-wave advance since 2003. That's continued, and we do not believe that is over yet. So let's go ahead and zoom in, and I'll show you why we believe the third-wave advance that began back in 2003 has not yet run its course. So if we zoom in and we take a closer look at the advance that emerged off the 2013 low, if you go back here, you can see that's the low, basically this fourth wave low. So we're in the fifth wave of wave 3 here. We can see that it does not yet look complete. This should become a five-wave advance itself. We got the first wave here, a large pullback that lasted over a year as a second wave. Then we've had a third wave up into the 2018 high, and now we're pulling back again. So it does not look like this is over yet. The fifth wave of wave 3, which began in 2013, does not yet appear over. It appears that we're in a larger fourth wave pullback here that should find support somewhere in this yellow area here. The yellow area is based on Fibonacci mathematics. It's based on a retracement of this up leg here. But bottom line, Apple should find a low to the current pullback somewhere at 140 or above. It's already found the yellow support area. That happened just recently, and it should find a low here and kick off to give us again that large five-wave advance to complete wave 3 that began back in 2003. So obviously these are very big up legs. If you look at the first wave of this advance, it went from about 50 all the way up to 120. You had a pullback back to 90, and then from 90 up to 230. So these are big multi-year up legs that we're talking about. We're going to be looking for another one once the current pullback finds its support somewhere in this yellow area and kicks off again. So let's go ahead and zoom in a little bit closer. We're just going to look at the 2018 action here. This is it. This is how we know that a larger pullback is going on here. You can see the up leg that started in late April is a completed 5-wave advance. The market has pulled back, or excuse me, Apple has pulled back since then. It has retraced more than 61.8% of this up leg here pretty handily. So that tells us that this pullback is more than just a correction of this up leg in 2018. Again, it tells us that this entire up leg off the 2016 low has completed. As you can see, it's a nice 5-wave advance, so that makes it sense. Makes plenty of sense there. So now we are correcting the entire up leg that began back in 2016, and it might take some time to do it. We can do this for another several months. We can see this pullback continue for the next several months. So as far as the near-term outlook goes, it doesn't look particularly bullish. It looks like Apple is going to continue to pull back as it gives us a larger 4th wave off of October's high. And like I indicated, it has some space to move still. It can move all the way down to 140. That would be about another 20% loss from where it is right now. I don't know that it's going to get that low. I'm just saying it's going to find a low somewhere above that level at some point, but it does has the potential to get as low as that before it turns back up. So that's kind of what we're looking at. If we zoom back in here, we can see the key level to the upside is going to be 203. That's fairly far away, but that's our biggest indication that this pullback is over and that Apple is resuming its uptrend. In the meantime, I think you have to expect it to continue lower. It does not look bullish again in the near term, but on the larger time frames, it certainly does, because these upside patterns, such as this one off the 2013 low, is not yet a completed 5-wave advance. So I wouldn't be going out buying it right now. If you hold it, if you're owning it and it's in your portfolio, I don't think you necessarily need to purge it. If it's in your 401k or IRA, it's probably a longer term holding for you anyway. And on the longer term time frame, Apple does remain bullish. But on the shorter time frame, again, it is not there. It is no indication of a low to this big pullback. It should find a low again somewhere above 140 and then turn back up. And we'll keep you updated as that happens, looking for indications of a low, but they're just not there yet. So you have to expect lower levels for now before Apple finds a low and resumes its long-term uptrend. So, hey, I hope that's helpful, guys. We do this every day at TrendLizard.com, and we're good at it. We keep our subscribers out of the mess and just focused in on the trendy moves when they're there. And if not, they're not there, we're hanging out in cash, and that's where you need to be until the good times return. So have a great day, and I'll see you again next week.